Okay, let's shoot off. Welcome. I'm Alex Deploy from Expert Forex. And in today's video, not video, today's webinar, we're going to be looking at the grid trend multiplier. This is a live trading session in that I'm going to identify specific trades that we can do using the grid trend multiplier. As a starter, I'm going to give you some basic background to the grid trend multiplier, how it works, how grid trading works, so that you can get a bit of a background. I see there are a few people in the room that are fairly new to grid trading, so I think I'll give you a quick overview. Okay, so here we are. Basically, grid trading involves trading a grid, and so we ignore the chart completely and we just draw grid lines over the chart that are separated by what we call a grid size. So the grid size, let's say the two lines are different by 100 pips. So the grid size would be 100 pip grid, and the lines would be separated by 100 pips. And that's basically how we would trade. So we only trade the price movement as the price touches a particular grid line and then moves on to another grid line. So it actually is a form of random trading because we basically ignoring all the formations, the candlestick formations, that all those support and resistance areas, all that type of thing. We're just trading randomly using grid lines. Okay, so now let me explain how grid trading works. And it's called the grid trend multiplier because what happens is that every time the price visits a particular price level and does that for the second time, there is a chance that that would be a profitable visit. And the more the price visits the same price over and over again, it multiplies the profit. So that is why it's called the grid trend multiplier. And you'll soon see why that is. Now, I'm going to start with the most basic movement that you can get in grid trading. And I'm going to use the concept of a sideways market strategy. Now, sideways, there are two strategies you can trade the grid trend multiplier. You can trade it in one direction, and I'll talk a bit about that one later, or you can trade it as a sideways strategy. Now, when we use a sideways strategy, we actually enter a buy and a sell at the same time. So one would start here, and if you can see my cursor, let's see if you can, yeah, you can see my cursor. Here's my cursor, here's the starting point. So what you would do is you'd enter a buy and a sell at that point. Don't try and work out the logics, that's how it works. You enter a buy and a sell at that point. Then the price goes up. And the rules of the system is you cash in positive trades and you leave negative trades open. So what would happen with that buy and sell? You would cash the buy in. And when you get to this level, you will open another buy and the sell. As simple as that. So then, let's say the price then goes down and goes to the next level. So the sell that you've opened there, because you opened a buy and a sell, the sell there gets cashed in. So let's stop at that point and work out what has happened here. So let's say this grid is 100 pip grid, and I'm just using nice round numbers to make it nice and simple. I'm ignoring spreads, and because I'm using 100 pips, the spreads becomes a smaller factor within the whole equation. But what would have happened is we would have cashed in 100 pips, and we would have cashed in 100 pips. So we've cashed in 200 pips, but now we've got two open deals. We've got a deal here, which is a sell. Remember, we started with a buy and a sell. There's an open sell there. It's actually breaking even because the price has just gone back to the level that the sell started. So that is a break-even transaction. And we've got up here a buy because we entered a buy and a sell there. And we've got the buy open. And that buy is now minus 100 because the price has moved 100 pips away from the buy. So we have a 0 and a 100. So it's minus 100, but we've got plus 200. We've cashed in there and we've cashed in there. Can you see we're in profit? 100 pips. Is everybody 100% clear about the result that happened there and the technique that was used? Because this is very important that you understand. I enter a buy and a sell there. The price moves up. I cash the buy in. I enter a buy and a sell there. The price moves down. I cash the sell in. So what's left is a buy transaction going up and a sell transaction over there. But the price is back at the sell position, sell transaction level. So that's a 0. And I have a minus 100 in the buy position. So I've cashed in 200 and I have a minus 100. And that causes me to be successful and profitable. But if you don't understand that, don't trade grid trading. As simple as that. If you don't understand the concept, don't trade it. Until you have worked out the maths behind grid trading, you need to do that. That is the basis of grid trading. So I'm going to give you another example. And a lot of people that are seeing this for the first time will be totally confused. But the reason why you are confused, you're saying, why am I buying and selling? Don't just accept that's the way that the system works. You buy and sell at each level, and you cash in the positives as it moves on. So let's look at another example. Okay, so the next example, same thing. I buy and sell there. The price moves up. I cash the sell in, and I buy and sell there. So the price moves up. I cash the buy in, and I enter a buy and sell there. So the price moves down. I cash in the sell transaction because it is positive, and I stop. So what have we got now? Now we have 3 open deals. We have a sell transaction over here. We have a sell transaction over here that is breaking even. And we have a buy transaction over here that is minus 100. So we have a minus 100 to sell there, a minus 100 buy there, a break-even sell there. That means if I add it up mentally, it's a minus 200 pips. But we have cashed in once, twice, 3 times. So we are plus 300. We are positive. That's just another price action movement that results in a positive outcome. Okay, all right. It looks like everybody's starting to catch up with the basic grid system. If you are still not sure, just rewatch the video. There's also a lot of other videos on YouTube which you can watch. You just search on YouTube for grid trading, and you'll find a whole lot. Also, if you visit my channel, you'll find playlists that are all about grid trading. So that's the way to go. So hopefully everybody's sort of getting a good feel of what's going on. So this was an example of a strategy, of a sideways strategy where you would buy and sell at the same time. So, okay, so here we go. So now the other option is to do a one-way trading plan. So in other words, instead of buying and selling, you say, I know this currency is going to go up, I want to buy. Or I know this currency is going to go down, I only want to sell. So let's take the example over here of a trader that believes that the currency will go up. So what the trader does is, instead of entering a buy and a sell, only a buy is entered. So a buy is entered, and unfortunately, as sometimes happens, the market doesn't quite follow the trader's wishes, and it actually goes down to the next level. So at that level, because it's a grid level, the trader buys again. So he's got a buy there and a buy there, and that buy is minus 100, and that one is 0. So the price then goes up, and because it's gone up and gone positive, that buy is cashed in. So at that point, again, we've made a $100 profit, because we have that buy there has been cashed in, and that buy is still open at 0. And then the price fortunately goes in the trader's favor and goes to the next level and is cashed in again, and a new buy entered there. So what's happened here is we've cashed in once, twice. We've got plus 200, and we have no negatives because we're only buying in this kind of situation. So that is the single direction approach. And as you can see, it is actually better if the price goes around rather than shooting straight up. But that is the technical, and you can see that the price has moved 100 pips from the starting point, and the traders has made 200 pips. So that is where the name grid trend multiplier comes from. The trend was 100 pips that actually happened, but the trader multiplied that by 2 and is 200 pips up. So again, that's the grid trend multiplier. That's where the name comes from. All right, so if you have complicated questions, just email Mary or myself. All right, so everybody up to speed on that particular, on the basics of grid trend multiplier, very important. So let's move on. So, all right, so what's the danger? So the danger here is that the price doesn't go sideways. It starts trending suddenly. And what then can happen? What then happens is that the losses accumulate. So if you have a trend and let's say you have a grid size of 20, remember that's the distance between the grid lines. You have a grid size of 20 and the trend starts running up to 400 pips. So what will happen is that your open deals will start accumulating. So the first deal that you've entered would have a minus 400. The second deal will be 380. So these are the losses that you would start carrying in a 400 pips. That's if the price went straight up. Now that very seldom happens, where it normally wanders up in waves, but it can show you how the losses can accumulate. So as the deal is going in the wrong direction, you can see the losses accumulate quite severely. And there's an example of a 0.1 lot. In other words, if the pip is worth $1, these are the kind of losses that can happen. And if you were trading a bigger lot size, the losses would accumulate even further. So here is the danger. You don't want to enter grid trading if the price is going to run away. So we're going to talk about how you handle that risk. And in fact, when you want to do one direction trading, you also don't want a quick trend, because if the price jumps 400 pips straight there, your multiplier effect hasn't had time to work. So you'll just make 400 pips, and that's also the grid hasn't helped. So what you're looking for sideways currencies, or you're looking for currencies that will very slowly trend in a particular direction. All right, so here's the danger of grid trading, and it's a real danger. It can wipe accounts out and that type of thing. There are ways that you can control that, but you need to be aware that this is the particular danger. And the whole idea is that hopefully your trading will occur in a sideways market. All right, so let's have a look at ways of reducing the risk. So the first thing to do is to select currencies that will not run wild, that will not run 600 pips or whatever in a rush. So on your screen, you can see the currency selector EA that we have, and it does various functionality, but we're only going to look at the ATR numbers here, and I've basically sorted them in terms of the highest to the lowest. So the first step when trading grid trend multiplier is select currencies that do not have high volatility. In other words, they cannot run away from you that easily. Now you can see the pound New Zealand is one of the highest volatility currencies. It moves in a day, it moves 121 pips. In a week, it runs 400 pips, and in a month, it runs 800 pips. So that's a highly volatile currency. Now, if you look at the bottom here, and we'll just take the Aussie, good old Aussie, it only has a daily range of 27 pips. It has a weekly range of 90 pips. It has a monthly range of 255 pips. Now you can see the Aussie isn't going to run away from you unless something really dramatically happens. So the idea is to look for currencies that have got low volatility and trade those either in a sideways fashion or in a one direction fashion. Does that make sense? So that reduces your risk. If you're going to use a 20 pip gap, then you're going to be wiped out if the currency runs 800 pips in 1 month. You're just going to be wiped out completely. Risk control method number 1 is choose currencies that have low volatility, and you can get it from there, but you can also get it, and I'll just bring up my all right, here are my charts, and on the chart I've got a series of currencies, and on the right hand side I've got a little indicator that EA Factory has written for me, and it tells me the volatility of the average candle, daily candle. So the average daily candle for the pound CAD is 96 pips. So average daily candle for the CAD is 35 pips. So you can see on my charts, I'm always aware of the volatility of it. It's very important. With a grid and multiplier, you want to trade sideways currencies, and the low volatility ones have a bigger tendency of going sideways. So just looking at this particular group, you can see that the pound New Zealand again has the highest volatility. And if we look down here, a currency like the Oz has got a very low volatility at 28. And what I like doing when I start trading direction, let's see if I can pull that up. I like looking at the weeklies. So now these ones are mainly low volatility currencies. I've taken the 9 currencies that have got the lowest volatility, and they only move less than around about 100 pips in a week. That's very low volatility. I must say the whole market has actually gone down tremendously in terms of volatility, and I'll show you examples of that if we have time, if somebody's interested. Now, this volatility indicator is currently not available, but if you'd like it, just let me know. Just in the comment facility, let me know. It's a very simple. I mean, look, it's so simple. It just prints the volatility on the chart for you. It is a very key indicator in that you can now compare currencies to each other, because some people look for the absolutely best setup, trade it, and because they're trading an extremely low volatility currency, the price only runs 30 pips or 40 pips, whereas if they were trading a high volatility currency, that would run 100 pips. All right, so there's a whole lot of people that would like it. I will publish it on our normal forum, not the paid one, but on the normal forum as a free indicator. So watch out for that in the next day or two. It's a very simple one. You just basically just say how far back do you want to look, and you can change the size of that number, and you can also change the color of the number. So it's a very simple indicator, but very, very powerful. What is the period? The period is what you want it to be. So if you want to see the average over 6 candles, you put it in 6. If you want to see it over 20, you put in 20. So it's flexible. There's no right or wrong. Depends what your needs are. If you want to see the short-term volatility, you use short-term settings. If you want to use the long-term volatility, you use long-term settings. That's basically how it works. There's no right or wrong. Thanks for that question. So I think you're getting the message. The idea here is to use low volatility currencies. We're going to have a look at some strategies. Now, I'm going to be trading 4 strategies. I'm going to be trading 2 sideways strategies, and I'm going to be trading 2 one-directional strategy. And the first strategy that I'm going to use is I'm going to trade the euro franc. The euro franc has got very low average true range. Is the same as volatility. It's the average range of a monthly candle, for instance, and that's sitting at 200. Now, because this is a very low volatility currency, I'm going to use a gap size of 15 pips. In general, when you're trading the grid trend multiplier, this is where you control risk. If you want to have high risk, you have a small gap size. If you want low risk, you have a huge gap size. So you could trade the pound New Zealand. You could trade the pound New Zealand using grid trend multiplier, but then you need gap sizes of 50 pips, even 100 pips, because it has a high volatility. So that's how you would balance risk. So if you traded the pound New Zealand, you would use a gap size of, I would most probably use about 80 or so, but between 50 and 100. So there's your other control. So you can use high volatility, but then you have to compensate with high gap sizing. If you use low volatility currencies, you can use much smaller gap sizing. Now, the thing about gap sizing is as you saw, you want as many cash ins, in other words, the price touching grids as often as possible, so that you can start multiplying your income. So if you have a big gap, if you're trading a 100 pip gap for the euro franc, you might only have one or 2 touches during the whole month. I mean, that's just not on. But if you were trading a 100 pip gap using the pound New Zealand, you might have 50 touches during the month. And so it's a balance between volatility and gap size. That's how you control risk trading the grid trend multiplier. You can use any leverage, but use your common sense. If you've got 30-to-1 leverage, your account needs to be 3 or 4 times bigger than somebody trading with 100-to-1 leverage. And that applies not to this strategy, to all Forex trading. So that is, you just need to use your common sense. It doesn't mean that because you're getting 30-to-1 leverage, you can't trade this. You just need a bigger account. That's all. And so on. In fact, 30-to-1 leverage is actually a lot safer when trading the grid trend multiplier. This system has been around for 12 or 13 years. You'll see I don't even use pruning. I don't use anything else. I just focus on the grid, the gap size, and that's the way trading happens. The more complicated any Forex trading system becomes, the more it gets overmanaged and your returns are reduced dramatically. So it's now the third comment that's come through where people want to change it to control it more. Don't do it. Let the price run freely. That's the way you make money. Okay, so if I were to use a $15,000 account, then my lot sizing for this particular strategy would be 0.02. Now, where did I get that 0.02? I wonder if I should show you now. Yes, let me show you now. I'll just go to our, see, we've got fantastic stats in a paid form. So that's what I'm going to, and I'm going to look at our monitoring accounts on the grid trend multiplier, and I'm going to look at, let's just go for the first one. This is the grid trend. It's a sideways trading strategy. I'm going to just go in there. All right. So this strategy trades the Aussie in a sideways way. It uses a 25 pip gap. It has been trading since the 6th of May. So it's been trading a couple of days. Let's see, 255 days. And what happens is that when enough profit is made in, we close the gap and close the grid and start again. Now that one missed it, but again, there was a closure and we start again. And now the reason for that is that open deals do have a cost, and secondly, the more open deals you have, the more risk. So there's another method that you can use to reduce risk. The minute you are in a reasonable profit, close the whole grid and just start again. Then you don't have the risk of a whole lot of open deals running up carrying costs and all kinds of other things. So you can see this actually in action right there. Now, this account started as a $10,000 account, and it traded. Let's have a look at the orders. It's trading 0.1 lot sizing. That's what it's trading. And that's the guidance that I'm using. I'm saying we've got a proven case here of 0.1 working. And therefore, if I'm going to use 15, I'm going to increase my risk a little bit to go to 0.2. So there's no complicated calculation. I just go by experience. So there's an example of how I found my grid sizing. If you want to have a look at let's have a look at another example. There we are. Let's go and see grid 2. Now this might have a different profile. How about lot sizing? Exactly the same ratios apply. So if I'm using 0.2 for a $10,000 account, then you must use 0.02 for a $1,000 account. That's how it works. You just apply the same ratio to your account size. All right, so here's a bit of a more jumpy one. You can see this one's more managed. And again, with the grid trend multiplier, what I do is I manually manage it. So over the weekend, I say, oh, look what this grid trend multiplier is doing. I'm going to close all my deals on Monday morning. So you just manually. So what happened here, there was a lot of manual decisions made. You can see it was, it went up and and I closed it and I closed it. Now I'm leaving it to run a bit. This one's done I think a little bit better. It's only a 20% return because you see survival is the more important thing. And let's have a look at the orders. Again, 0.1. So I know 0.1 gives me a survival option and a profitability option, and that's one. If you want your profits to be higher, you increase that number, but then your risk also increases, and that type of thing. So that's more or less where the lot sizing happens. Now, I don't know if you've seen my latest video about cent accounts. A lot of people, even if you downscale this, so 0.1 for 10,000 would be 0.01 for 1,000 account. Now, a lot of people don't have $1,000 account to trade. So the next step is you open a cent account. Now, a cent account is 100 times smaller than the smallest micro account that you can get. So in other words, suddenly your dollars become cents. It's 100 times. So your dollars become cents. That's literally what happens. So you go to your broker. There are quite a number of brokers that run cent accounts. And suddenly, if you've only got $1,000, or let's say suddenly if you've only got $100 account, that 100 becomes 10,000 trading units. So you then trade 10,000 as if it's dollars, but that's actually cents. So that's the way to get around small accounts. Just open cent accounts. And I think there is let me just see if I can find the video on that. But there it is. And there's the video link. Hey everybody, Alex Deployer from Expert Forex, and in today's video we're going to be looking at the question. All right, so let's go back. Sorry, that was a detour, but quite a relevant one, because it's important that you realize that if you use lot sizing that's inappropriate to your account size, you are going to lose. You're going to expose yourself to a lot of risk. If things go well, you're going to double your account, and that's what happens. You often hear people saying, "Oh, I doubled my account, and then I gave it straight back to the market." It's because the guy was over leveraged in terms of lot sizing. Okay, so that's strategy number one. All right, so there's strategy one. Any comments or questions on strategy one? Sorry, I detoured a bit there. No, all good. All right, so I've chosen and if we go back, let's go back. So I've chosen the euro franc there. Euro franc, which is one of the lowest volatile. In fact, you can see on a monthly basis, it's most probably the lowest. So that's why I've chosen that particular currency. So, all right. So then we go to the Oz. As you've just seen, I've just shown you an example of the Oz. The Oz does perform well using the grid trend multiplier. It has a low volatility level, but I mean, I'm happy to increase the grid size to 20. Because the Oz is slightly more volatile than the euro franc, and that's why I'm controlling risk. I'm saying this is a slightly riskier currency. I'm going to go for 20 pips. Same, and I'm going to use the same lot sizing because the risk is already managed in that particular area. All right, good question come in. Is it possible to change the grid size on the fly? Yes, you can. Obviously, you can't affect open deals, but certainly new deals will be opened using the new grid size that you specify. So you can change that. You can, and in fact, I do that. I do that quite regularly. Thanks for that question. Please, there's a huge lack of common sense and logic being used by Forex traders. They want formulas, they want rules, they want this, they want that. Please just, relax on those rules and formulas and things like that. Just use common sense. And the volatility of a currency is not the only thing you need to take into account. You need to take the trendiness. So a currency can have low volatility, but can be very trendy. And another currency can have high volatility, but have no trending. It's just going sideways, but it's got huge sideways candles. So there's a lot of other factors. And that's why I say if you tie yourself into rules, you limit yourself because your logic stops working. All right. Okay. Yeah, if you change the lot sizing, the previous ones will be managed according to the rules that were set at that time. So let's just move on. All right. So has anybody got any comments regarding this strategy? What would you do? Would you have higher gap sizes? Would you have bigger, smaller or bigger lot sizing? Would you, is there any variation that you would do, and why would you do that? All right, so let's move on to now we're going to get to the most interesting stuff. Now the single direction strategy. So the single direction strategy that I'm going to do is I'm going to trade the CAD, and I'm going to trade a buy direction, which is quite controversial. The CAD has got reasonably low volatility. I'm going to use a grid size of a gap size of 20, which is quite aggressive. So on this particular account, I'm going to go aggressive. I'm really going to go aggressive, and you'll see how aggressive I get. Counter, and then the lot size is going to be 4 times the sideways lot size. Now, the reason is that you can make a lot of money if you get the single direction strategy right. You can make a lot of money if you get it wrong. Because if it goes wrong at first and then goes right, you're going to make a lot of money. If it goes right and then goes wrong and goes right again, you're going to make a lot of money. If it goes right all the way, you're going to make a little bit of money. Because you don't want it to go right all the way, because the grid trend multiplier is not going to work. Does that make sense? So you want the thing to actually battle. You want the currency to go in the direction you want it, but it must battle to get there. It must go the wrong way, go sideways, that type of thing. A lot of people say, oh, here's a great deal, I'm going to use the grid trend multiplier. But if your currency is going to run 100 pips, why use the grid trend multiplier? Because it's not multiplying your trend. It will just go straight up. You hit your target and you've made 100 pips, whereas the idea behind the grid trend multiplier is to go 100 pips but make 300 or 400 pips. So you need it to dawdle and go up and down and all that type of thing. All right, so here it is, the CAD. I'm buying the CAD and the gap size, I'm not. I might just quickly see if I can show you why I'm buying the CAD. See if the CAD's here. All right, so as I say, I'm a simple person in terms of trading. So let's just have a look at why I am buying the CAD. Now, this is in a sell. This is in a. I'm a contrarian trader. This is in a sell trend. Why am I? It's broken support or resistance, and it's a problem. Now, what I do is I just say, oh, let's go dancing. So, or not dancing. You can do anything, but down. Just get the rhythm. Get the rhythm. Down, up, down, up, down, up, down, up, down. What's the next direction? How's that for a simple method? That's what I use. So that's how I decided to buy the. Now this looks completely wrong. The buy looks completely wrong, but that's what I've done. I've used the dance method to decide which way to trade the CAD. Okay, any comments on that trade? Now, if it doesn't work, I might blow my account, and that would be sad, but, you know, life has to carry on. If things start going badly, what I'll do is I'll start increasing the gap size. I'll start decreasing the lot size, and that's how I'll manage risk. Question, do you mainly look at weekly? No, I look at weekly and daily, but I don't go any shorter than that because you want to trade the big patterns. The weekly, the monthly, the daily charts give you the big patterns of what's happening in the market. And for this kind of trading, I use weekly and daily. All right, any comments on the CAD trade? Is the strategy tester needed for optimize? All right, yeah, that's a fair question. The grid trend multiplier is a trading tool. All it does for you is it will cash in your deals when the grid levels are hit, and it will open other deals according to your instructions. It is a trading tool. It is not a set and forget plug and play EA where anybody can buy it off the shelf, plug it in, and forget about it. It is for people that traders that have to think a little bit more about what's going on. So it's not a set and forget. So if you try and optimize this, you are going to fail. Can you see? I am doing it transaction by transaction. If I've made enough profit, I just cash it in. If things start going badly, I just quickly change the grid size and the lot size. So it's a trading tool. It is not a set and forget. So the first thing people do is they buy the grid and they start optimizing it. For heaven's sake, I've just told you the optimized settings. The optimized settings in general are between 15 pips and 25 pips for general grid trend multiplier trading. If you have a highly volatile currency, obviously, then you increase that. But in general, 15 to 25 is a good grid size. You don't have to go and optimize. What you have to do is you have to find the right currency. You have to find the right lot sizing. You have to find the right type of account. You know, those are all more important factors than there's a fascination on optimization that's taken the Forex market over, and what that does, it kills your logic and common sense. And that's what I don't like about optimization. People think they can sell their brain by optimizing. Rather, use your common sense and say, oh, look, you know, and analyze what would have happened if you followed the following. Look at the chart. Anyway, thanks for that question. Optimization is inappropriate. How often do you review the progress on your, as often as necessary? If things are going well, just leave it. If things aren't going well, then you interfere. And you can do that over weekends. You can say, oh, look what's going on. The fewer times, the better. You must realize that over management is the main cause for failure in Forex trade, over management. So people try not to lose. Now, this particular strategy is good when you're losing because the price is going the wrong way and it will bounce back, and then all of those negatives will become positive. So, you know, it's just a perspective that you've got to have. So you need nerves of steel to trade this strategy, because in a lot of times you're trading mainly in a drawdown, but when it does draw up, when it actually becomes profitable, then you cash in and you start again. You know, you've got to play the game. You've got to have a strategy. You've got to do that kind of thing. You can't mechanize and automate everything in Forex trading. Now, you can do that with certain ones, like the dream machines and automated technique, but this is a thinking trader's EA. It's a thinking trader's EA. You've got to select the currency, the lot sizing, it's a whole lot of, and you've got to manage it very, very well. Okay, so let's move on to the so that's the one. The next one is the yen. The yen single direction strategy. I'm selling the yen. It's got a low volatility. I'm using a 20 pip gap, same as the CAD, and I'm also going to use a lot size to kick off with. So I'll see how this goes. I might increase that or decrease that. See how if it goes positive, I'll just leave it as it is. Again, if we look at the yen, let's have a look at the yen. What did I say that I was doing? Selling it. Yeah, I'm selling the yen. Okay, so again, let's just let's dance down, up, down, up, down, up, and it's falling over, and that's why I'm selling it. Also, the general trend is down. And so on. So that's why I'm selling the yen. Very simple. Look, I mustn't oversimplify it. It's bouncing against a support, a resistance area. It's at the top of a channel. There's it's broken a trend line on the RSI. There's a whole lot of other things that are happening here, but in general, that's how simple you can make the trading. Jumping around a bit. All right, so that's the strategy. Let's see how it goes. What I'll do is I'm going to create a portfolio. I'm going to put these trades into the portfolio. I'll make it available. The portfolio, I'll make it available on the forums, and you can look at the progress that happens. Okay, I think we're at the end of the webinar. Those are the strategies that we're going to follow. That was the purpose of it. This is a live trading session. So what I've tried to do is I've tried to explain a bit about the GTM, try to explain the strategies that I'm going to follow and why I'm going to follow them, and how I'm going to manage the results. If they go well, I don't touch them. If they go badly, I might fool around with gap sizing and lot sizing and things like that. Okay, so yeah, that's the end of the webinar. Thank you very much for your attendance. I will stick around. There are a few questions that have come in, but this is the formal end of the webinar. I will circulate a recording of it at some stage and make that available. And again, thanks for your questions. Thanks for your participation. It's always nice getting lots of questions, and just use the normal Expert Forex email address for questions, or go to the Expert Forex website and use the Contact Us facility to send your question, any further questions.